When the S&P 500 starts crashing, most people do the exact opposite of what they should be doing. Panic spreads everywhere. Social media fills with fear, financial news channels switch into emergency mode, and suddenly even experienced investors forget everything they've learned. The moment the chart turns red, millions react emotionally, selling everything they own, locking in losses, and destroying years of potential growth. But if you're watching this, you don't have to repeat their mistakes. This crash is not the end, it is an opportunity. Today, I'll show you what the top 1% really do during these moments, how they stay calm, how they think strategically, and why this moment might be one of the most important financial moments of your life. Let's zoom out for a second. Every time markets crash, it feels like the world is collapsing. It feels like this time is different. But look deeper, and you'll see a pattern. Crashes have happened during wars, recessions, pandemics, inflation spikes, and tech bubbles. And after every crash, the market has recovered, stronger than before. The dot-com bubble wiped out trillions. Yet the S&P still went on to hit new highs. The 2008 crisis shattered global markets. And yet the S&P entered the longest bull run in history. In 2020, the fastest crash ever recorded seemed unstoppable. Yet the S&P recovered its entire drop in just months and broke every previous record. Crashes repeat, recoveries repeat. What doesn't change is human emotion. The average investor reacts with fear. The wealthy react with discipline. When the market turns red, this is where the separation happens. The wealthy stay calm, the wealthy accumulate. The wealthy keep their long-term vision, while the rest panic. But this doesn't mean you throw all your money into the market blindly. No, there's strategy behind every move. And there are 4 steps the top 1% follow in every downturn. Step 1. Never panic sell. Selling during a crash is the biggest mistake any investor can make. It's like jumping from a roller coaster mid-drop because it feels scary. Long-term investors don't get hurt by crashes. They get hurt by fear. Step 2. Build or protect your emergency fund. Before you even think about investing, you need stability. Markets crash when life is already stressful. During inflation, job uncertainty, and global tension. If you feel financially exposed, you'll never make strong decisions. A solid emergency fund transforms fear into confidence, and confidence is what allows you to act while others freeze. Step 3. Buy the dip, but do it smartly. The wealthy don't try to time the bottom. They accumulate slowly and consistently, weekly, bi-weekly, monthly. When prices fall, your money buys more shares, and those shares multiply your gains during recovery. Crashes don't destroy wealth. Hesitation does. If the market feels scary right now, that's exactly why it's an opportunity. Step 4. Upgrade your portfolio. Crashes reveal weaknesses. This is when you cut the low-quality speculative positions and prioritize strong index funds, blue-chip stocks, and proven dividend payers. A crash shakes the foundation of your investments. Whatever breaks wasn't strong to begin with. Use this moment to rebuild smarter. Right now, you stand at a financial crossroads. One path is crowded with people who panic sell, blame the market, and end up regretting their emotional decisions. The other path is quiet, calm, strategic, and focused. This is where disciplined investors walk. This is where future millionaires stand while everyone else panics. And you have to decide which path you'll take. Remember this: the S&P 500 crashing is not the enemy. Your fear is. Fear convinces you to sell at the bottom. Fear convinces you to stop investing. Fear convinces you to wait for certainty, even though certainty never comes. But if you stay disciplined, patient, and strategic, the market will reward you, just like it has rewarded millions of investors through every crash in history. This moment is not a dead end. It is a doorway, and the people who walk through it with courage are the ones who build lasting wealth. The brave get paid, the patient gets rich, and the disciplined win the long game.